I'd like to introduce a good friend and a new chairman of Maine Management's advisory board, Rusty Vanneman. We made sure for the entire office today we had our summer intern Luke, who did a book review of Rusty's book that you wrote from back in 2017, Rusty.
Yep, 2017.
Wow, what inspired you to write that?
Well, I think I'd wanted to write a book, but working at CLS Investments, the Clark family runs CLS, and Todd Clark, the older brother of Eric Clark, said you really should write a book.
Wow.
And so that was the nudge I needed. So thank you, Todd.
I love it. And Todd, as you well know too, I've known Todd for probably not as long as you, but I've known him for about a dozen years, and awesome guy, awesome guy. So that was really good advice.
I came across a book, one of the versions of the book recently, because I was organizing some stuff in my house, and I found the book that every single employee from CLS Investments signed. It was so
Oh
cool. It was
my
really
gosh.
They would take like favorite passages from the book and they would say, "This is so good." And it was really neat. I completely forgot about that. I hadn't seen it in years.
Oh my gosh, I love it. I love it. So you've had a very, very interesting career, Rusty. I know, former CIO, CIS at Orion, at CLS. You had your Boston stint. You've been in the business for 35 years?
35 years.
Wow. Yeah. Wow. 35 years there. Obviously, very deep knowledge of the ETF space there. And as your book, highlights there, the behavioral aspect, which is obviously a huge part of the market. So if you kind of look at your 35 years there, what are some of the highlights that you're really proud of and that have really kind of influenced you, Rusty, and have been beneficial to be able to pass that knowledge off to advisors, clients, friends?
Well, I guess one advantage of being in the industry for 35 years, there's a lot of highlights. I would think that probably the very top highlights are all the times that I've helped people.
Yeah.
Whether it's the ultimate investor, whether it's the advisors, whether it's all the people I've worked with. I mean, all the people that I've learned from.
Yeah.
It isn't just me giving to them. I've learned so much from my colleagues. And so if I had to say particular highlights, I mean, sure, there's certain achievements and awards, which I think are really cool. But in the end, it's about the people.
Yeah. Yeah. And the people, you're right. I mean, people are phenomenal. I mean, from like you said, from vendors, from advisors, from teammates.
Mm-hmm.
I mean, the whole thing, it's really kind of reminds me, it's like last night, I'm not a big ball stick guy. I'm not a big hockey fan, but I was watching the final, the Florida Panthers and the Edmonton Oilers, and just watching that camaraderie at the end with the 29 teammates there, and just looking that family, that bond, the highs and the lows that they go through, and you get the same type of thing in your career.
It's a great feeling to be part of a team.
Yeah.
A team that is performing at a high level. Everybody knows it. It's the best.
Yeah. That's awesome. So you and I remember our history kind of goes back to the ETF strategist days that was sponsored originally by, I think, State Street, and was it Invesco or was it State Street? Yeah, I can't
It's a blur.
It's a blur.
Yeah, it's a blur.
It's a blur. I think it was State Street and Invesco, but that's where you and I first got to meet as you were obviously running the show at CLS, and Maine Management was just a little teeny speck at that time. But that was an incredible camaraderie that we had amongst all of us.
Well, I mean, it does go back years. I think we were on various panels way back when. And, even though we were all sort of competing as ETF strategists, we really weren't, because the pie was growing so much and it continues to grow.
Yep.
And so I think everybody was really kind of working with each other, educating everybody how to use ETFs. And so we go way back. And then, of course, as CLS grew, being part of Orion, we started acquiring other companies, and we bought FTJ, and FTJ and CLS merged to become CLS Investments. And of course, you were already on FTJ, and a great partner there. So we have worked closely together on so many things, webinars, presentations, client events, podcasts. So yeah, we've known each other for quite a while.
Yeah, and I love the fact that we both have a very common shared interest that this business is all about the client
Mhm.
and about providing solutions and exceptional service. And so that passion that we both have is well placed and it means a lot.
Two follow-ups on that, Kim, real
Yeah,
fast. Well, first of all, I mean, we just talked about all the things we've done, but I did forget to say we've also surfed together.
we have.
Now, I should say you
We,
surfed and I crashed, but and I even one time at the end of 4 hours out in the water, I might have been getting a little tired, but the board came back and smashed me in the face. And one thing that was really interesting about that is, of course, it was at your big client event every year,
yep.
and I had a little shiner.
I,
And I just remember telling people, like, I found out when surfing, you do not argue interest rates with Kim Arthur.
so, backstory for people on that, I got to hand it. Rusty is a huge stand-up paddler. And he spent a lot of time on the water, and he hadn't surfed. So we went to a place called the Bolinas Channel, and there were some head-high waves that were coming in. And I got to tell you, I've never seen somebody with a commitment and a quick study of learning how to get up on the board in that environment. And he did an awesome job. Now, also, we left out for the information. We didn't want to be fully transparent, but that area where we surf, there's actually a lot of great whites. They're not right there, but they're right knocking on the doorstep. So we kept that on a need to know basis later on, that I think some of his friends and possibly his wife may have asked him about. But his point there, it was like right at the very end, we had paddled back. It was about a mile paddle back after surfing there, and then getting back onto the shore is always tricky because it's a shore break that you have to come in, and you can't allow the board to get between the ocean and yourself there when when you're coming in. And I remember looking over and seeing it, but like a trooper he just kind of like swatted the board aside there.
The wave sequence was different there than
It
we
was
were
very
spending all the
different.
whole time. So I was tired. It was, oh well, it looked cool.
Yeah, no, but that was awesome. That was a lot of fun. So maybe tell us a little bit, Rusty, about the behavioral coaching that you've done for advisors. What kind of, let's lock in on that for a minute.
Well, let me kind of go a little bit bigger picture here and
Yep.
just sort of talk about sort of the purpose of kind of my work,
Yep.
and so I entered the industry only wanting to be an investment manager. So it's all about manufacturing a rate of return. But as my career developed, I became a chief investment officer, which I've been for the most part for the last 20 years. And I felt it was really important for portfolio managers not only to manufacture that rate of return, but also to communicate. And I just didn't think you could be a good analyst or portfolio manager without being able to write it down and articulate it. I just think it helped so much with decision making. It also helps slow people down. A lot of PMs are looking at screens all day, and if you actually have to take the time to write. But then I realized it was even more than just sort of articulating, but it was also helping investors. And again, our purpose here and at Main Management is it's really about the investor's return. And it's not about the investment return, which earlier in my career was all about maximizing your portfolio. It's about the investor return. What is their experience in it? And again, investor return is what do you get after you adjust for taxes, after you adjust for inflation, after you adjust for behavior. And that's really important. I think the communication is really important, but it isn't just the communication, of course, it's also the service. And the client comes first.
Yep.
And I'm from a small town in Nebraska, and my parents own car parts stores. And my dad always said the client comes first. I mean, seriously, that was his mantra, and he lived it as well. So it's always been part of me as well.
Yep.
And I think so you have to communicate, you have to serve. Kind of related to that too is on the whole behavioral coaching thing is when it comes to serving other people, it's also really important, not just the end investor and the financial advisor, but it's also the people on your own team.
Yep.
And so it's about recruiting, but it's also about mentoring, and it's about giving them opportunities to learn. And when you can mentor somebody, you get the satisfaction of not only you hopefully improving their lives professionally, maybe personally as well, but they in turn are able to help other advisors and end investors. And so you sort of get this exponential effect, and it's very, very satisfying. And so really behavioral finance sort of weaves its way all through that because it's ultimately about behavior.
Yep.
It's ultimately about improving that investor return, what we're here for.
Yep, exactly. That's so well put there. Yeah, you like me. My father was in the construction business. I grew up in a small town with 5,000 people. The summer it would balloon up to 20,000, and he lived off of those tourists. And he was always every meal when we sat down, he said, "The food on the table here, this has come from the clients that I help
Right on.
for them." And so you learn. You're right in the beginning part
Yeah.
there. So I love it. I love that part. Um, so what I'm really excited about is again coming back to you joining our advisory board as the chairman. We are so fortunate to have you, and I really look at this role. You are the ambassador, so we will now have two ambassadors at Main Management. We've got Dick Fredericks, who's one of the founding partners, who was the ambassador to Switzerland back in the late 90s, the early 00s. And now we have Ambassador Rusty. And I
like
think
it. Sounds great.
I love it. And I love that term ambassador because and you fit it to a T there. Ambassadors, everybody likes an ambassador. There's some people you meet and they're very sort of black or white. And, people either like them or they don't. But with you, everybody that meets you likes you. You're a likable person. And so I think the ambassador is a great title. So maybe talk a little bit about the opportunities ahead for yourself personally and for Maine and their clients as you see your role in this ambassadorship.
Well, let me just talk about why it's so attractive to be an ambassador for Maine. And so it kind of goes back to what we earlier talked about. It's that relationship we've had for years
Yeah.
and the trust that we have. And it basically we can just do a handshake and we just trust each other.
Yeah.
And I mean that's huge. That's what this whole industry is all about. But let me just kind of put on my due diligence hat as well. And so I have been in charge of various due diligence teams, and I've been analyzing managers and investment management firms for really 3 decades
Wow.
now. And Main Management embodies a couple of the most important characteristics you want to look for in a firm. And first of all, it is you eat your own cooking. And
Yep.
that to me, that was actually one of my screens even is like, do the portfolio managers invest in their own funds? And Main Management, employees and partners, eat your own cooking. That is huge. You have an emphasis on low cost. Low cost and eat your own cooking are two of the most highly predictable variables of investment performance. Privately owned, where most of the employees own equity in the firm. That's another huge variable as well. And then the emphasis on something that I like to do a little bit differently on due diligence is, a lot of people have their P's, people, philosophy, process. One thing that I like to actually not emphasize was performance.
Right.
Performance is table stakes. It's almost obvious that performance is going to be obviously analyzed, but it was being a partner. And being a partner was what work did you do to support the investor?
Yep.
And Main Management is just simply top notch at that. So those are the reasons why, I'm here. And again, just I guess there's more reasons. I mean, again, we go back. We both are ETF guys.
Yep.
And the ETF, industry has just exploded since we've been involved with it. And quite frankly, it's got a long ways to go.
Yep.
I mean, you want to be on a wave that's growing, and ETFs definitely do that. Main Management is discipline in terms of their investment approach. And I've always felt two of the most important things an investment manager could also do is, in terms of their investment process, it has to be disciplined and differentiated. Boom, check. Main Management's got that as well. And so those were really key. And then one thing that I always emphasize, and this is really kind of summarizing some of the things I already said, and this is something I also put sort of on the mission statement on every research meeting at CLS Investments, was the importance of what my formula was called X plus one. And what X plus one was, X was expectations. You have to set expectations with your clientele, tell them what you're going to do, why you're doing it, and then do it. You don't need any adjectives. You just do it. That is expectations. But then it's the plus one. What are you going to do to go above and beyond that? It's not manufacturing that rate of return, but it's supporting the investor, it's supporting the financial advisor to make sure they have a good investor experience and the good investor returns. So I didn't even really answer your question right off the bat was, the role as an ambassador. Well, you can see why I'm excited to be an ambassador. And I think in terms of my role of an ambassador is hopefully I can just kind of deepen the impact on advisors, fortify, reinforce the main management message, which I think is great, potentially be a sounding board, and just really ultimately supporting the client first mentality of main management.
I love it. I love it. Yeah, one other thing that we like to talk about here, since we are affectionately in the People's Republic of California, is the after tax portion
Yeah.
too, for the taxable accounts. And the most of the money that main management partners have is taxable money. And like you said earlier on, I mean, it's sort of what does the client actually get to eat? They've got to eat it after fees and after taxes for the taxable one. I love your analogy and the expectations on that plus one, because it's so important to set the level of expectations for different strategies that you have for clients and advisors, and then deliver on that. But the plus one, I really, really like that. That's definitely a unique feature. I also always hearken back to the old days where Merrill Lynch used to always do the surveys of their clients as to why clients did business with the old school Merrill Lynch brokers.
Yeah.
Somebody that we today would call an advisor. And it was interesting on the performance side. Performance was typically always the number 4 reason. And it shows you again about that relationship building, about building up relationships and having trust, that someone trusts you, Rusty, the ambassador. And it's so key to be authentic and have people trust you, which is great. And again, I think that's why you and I have always gotten along so well, that we have those characteristics and those traits.
Absolutely. A couple of the quick points too.
Yep.
About being an ambassador too. And I mean, it really is, again, fortifying sort of the thought leadership that main management is doing. And you guys are already putting out so much great stuff from the investment team. The marketing department does a great job, but it's really sort of fortifying that message as well. And I think that's really important. One thing that I've learned over the course of my career is, again, early on, portfolio manager, investment manager, manufacturer rate of return. There was one role in the industry I used to always kind of make fun of, and that was chief investment strategist, which I've had that role. Now, I just want to say why I'm bringing this up is that, well, first of all, there's 2 different kind of chief investment strategists, and I think it depends on your audience if you're good or not. And I think there's a chief investment strategist whose audience is asset managers, professional money managers, and I think that role is about being provocative, thinking about possibilities. It's really enhancing whatever research that asset managers are already doing. So to be a really good strategist, hopefully your batting average is pretty good. But your batting average doesn't have to be perfect because it's about possibility thinking, just thinking about different things. Now, an investment strategist working with financial advisors is a little bit different. And because in the end, is that for an investor to be comfortable and confident in their investment plan, the advisor that puts it together needs to be confident and comfortable in that investment plan.
Exactly.
And for the financial advisor to be comfortable and confident, then that investment firm, that sales team, the investment team also needs to be confident and comfortable as well. So a strategist is really given the tools and the resources and the talking points that help not only a sales force, but it's helping the financial advisors in turn talk to financial advisors. So to be a good a good chief investment strategist, you can't read the news.
Right.
Well, sometimes reading the news can be functional, right? But you just need to be able to give them the ammunition, again, that they can be comfortable with the strategy, because strategies, even the best performing strategies, go through periods of underperformance. And that's why the relationship is key and the expectations are key. So if you go into a fund or strategy and you're comfortable the way it's going to behave over time, and it behaves as you expect, it doesn't mean it's always going to be, the market.
That's right.
You can stick with it over time. And the longer you stick with investments and strategies and strategists over time, the better results you're going to have.
Oh, it's so true.
So
When I first got in the business, I asked some of my institutional clients, I said, can you give me some books to read so I can, become better at my craft? And some of the best books I read were about different managers. They each had different strategies. Some were value, some were growth. They had different factors. They had different pieces, but the key factor with every single one of them is they stayed in their lane.
Mhm.
They stayed in their lane. Their strategies weren't always in vogue, but the ones that got in trouble, they tried to shift mid-course.
Oh yeah.
And that, again, it goes back to setting the expectation for the return for the end client there. You cannot deliver on that expectation if you're shifting
Yeah.
and mixing. So to your point there, they're not always in vogue there, but if you stay with it there, then the client's able to mix and match and put it together.
Quick follow-up
Yeah.
comment and
Yeah.
a comment. Well, first of all, the question is, was that book you're referring to Market Wizards? by Jack Schrader?
Bingo.
I know,
You
exactly.
nailed it.
I mean, seriously, one of the best books on
What a great
investing. I mean, it's short term, but it gets across the point
Yep.
of discipline, risk management.
Yep.
I mean, it just gets that across. And it's just such a fun read, too.
Yep.
And then sort of the comment that relates to that, and again, this is one of the reasons why Main Management is such a strong asset management firm, is the discipline and process.
Yep.
You're gonna stay in your lane.
Yep.
And having done due diligence on so many managers, is that I'm making up a number here.
Sure.
But I would say that most professional managers are thinking more about their careers
Yeah.
than their investment mandate. And so they're worried about career risk, or the firm is mandating some business risk, expectations on them. And they break down their discipline.
Yep.
And to me, as a due diligence person over the years, if I saw somebody do that,
Yeah.
I wasn't recommending them. You needed the discipline. And again, Main Management has that in their investment product.
Yeah. No, that's a great point. So let's go into the topic of your podcasting.
Yeah.
Obviously, you've got a great body of work. We talked about your book that you wrote in 2017. You've got an incredible, The Wayne Machine, incredible body of work that you've done with podcasts. You're going to continue that, and I know that Maine is going to be one of the sponsors for your podcasting series. Why don't you tell us a little bit about what you hope to achieve and what you hope to deliver to advisors and clients?
Well, I'm really excited for the new podcast. It's kind of interesting, but I became a podcaster. Again, it's like, how did I get here? I think it was all those years ago telling my investment team to communicate and get the message out. It's the X+1.
Yep.
Explain what you're doing and then give all the ammunition for it. And so for years, I had a weekly podcast called The Weighing Machine,
Yep.
which is a reference to Benjamin Graham's expression that over the long term, the market is a weighing machine. It's about valuations and fundamentals. But over the short term, it's a voting machine. It's emotions and narratives and things like that. And I also had a monthly called Weighing the Risk, which is a little more like current market environment type stuff. And the weighing machine was broader. It could be any topic a financial advisor could be interested in.
Mm-hmm.
The new podcast, which should be launched in the weeks ahead, Invest Well, Be Well, is a little more focused. And sort of the tagline for it is wiser investing and stronger living. And so what wiser investing is about is kind of things we've talked about. It's more about principles. It's not going to be about market outlooks. And what are some of those enduring principles that enhance your chances for long-term investment success? And stronger living, meanwhile, is a little more about performance. How are you performing both in your professional and personal life? And that is about decision making. It's about energy management. It's about resilience. And all this ties into sort of one of my easy taglines, and just sort of an easy way to think about helping investors achieve their goals is stay invested, stay diversified,
Yep.
and stay disciplined. And really that wise investing is staying invested and staying diversified, but that stronger living really ties into the discipline and having a discipline, whether it's in personal practices or what you're doing professionally. And so it will be weekly, and the star of the show will always be our guest. And there'll be some guests. There'll be notable names from asset management, wealth management. They could be from the wellness industry. It could be, people who are experts on client service, whatever it may be. So it's about wiser investing and stronger living.
So let's unpack a little bit the stronger living, the be well part.
Yeah.
And why don't you tell our listeners here what you personally do in that area? Because I know you do a lot. You're obviously a very fit person. You got a lot of activities that you do. So I'd love to kind of hear from that side.
I do a lot. This could be a podcast in its
I
own,
100%.
so I think one of the most important things, and probably a lot of people listening to this already do it, it's to win the day, you've got to win your morning. You've got to get up. You have to have a routine because life you can't really control. What can you control when you cannot control? You can control your morning. And so you could have a winning day even if the rest of the day is choppy because you're doing the things you need to do, whether it's reflection exercises, breathing, working out, good nutrition, family time. You do those things, you've got the day started right.
Yep.
And then after that, it's just being active. And, I'm active in a lot of different ways. And I think it's sort of the Reader's Digest version of all the things that I do.
Oh, I love it. I love it. Yeah, I always like I know in the military, their big thing is they always tell the soldiers, the enlistees, the first thing you do when you get up in the morning is you make your bed.
I always do.
Exactly. And now you've got one
Yeah,
victory
exactly.
right away there. So you've already set the tone.
I grew up where I could not even have a wrinkle on my bedspread.
Oof.
My parents were tough.
I love it. I love it.
Client comes first and make your bed.
I love it. That's so good. Can you tell our listeners here a little bit about, you got a couple designations. You've got your charter financial analyst, you've got your market technician. Talk a little bit about the path that you did to get to those.
Well, sort of my history, how I became interested in the markets. I mean, it's an evolution. So, when I was in high school, I actually was really interested in economics. I was also a baseball player. I love baseball stats. So by the time I get to college, I still wanted to be an economist. And one of my really good friends' mother said, "There's no way you're going to be an economist. You should be a stockbroker."
I love it.
And she bought me a book, How to Buy Stocks, which is really basic. And then she also bought me a stock, Ozark Airlines. So it was just all a gift. And then I went to Babson College, and Babson College is a business undergrad school, and I emphasize finance and investments. I mean, really, technically, the degree was always in entrepreneurial studies in management, but I emphasize finance and investments, and I also got the opportunity to meet Sir John Templeton.
Wow.
And again, I'm from Nebraska, so the influence of Warren Buffett is always there. And so that was sort of the background. So I always knew I wanted to go into investment management. And then, in short, my first big break professionally, my first job out of school was with General Electric aircraft engines. That was not investment management, but it paid really well and it sounded really cool. I realized that isn't what I was going to do. So eventually I landed a place called Thompson Financial, a group called Technical Data, and it was awesome. I mean, they paid us dirt. They worked us crazy hours. I mean, we got there early. We worked late. We worked weekends, and it was so much fun. We took the work home with us too, and basically we were supporting bond traders and commodity traders around the world.
Wow.
And it was really short-term stuff. I have to write commentary every 20 minutes. And there was two different types of analysis we did. One was flows analysis, talking to the street. I didn't do that. I did the technical analysis. And so I did technical analysis early on, despite having all that fundamental analysis background. I was already in the CFA program, which of course is more about fundamental analysis as well. And so I became a CFA in the early 90s and a CMT in the late 90s. I think I was one of the first 10 people to have both credentials at the same time.
Wow.
And I think the technical analysis is, it's still sort of baked into me in the sense that, a lot of people think technical analysis is really short-term type stuff, but it's about principles. Everything's about principles. And you could say that technical analysis is really a kind of a way of quantifying a lot of behavioral and behavior going on in the marketplace. But I think technical analysis has a couple of key attributes that are really valuable to a lot of people. You treat the charts as another analyst.
Yep.
And so one is providing valuable perspective. I think a lot of times you look at the headlines and it's really breathless and super sexy, like this is the most since then or since that. You just look at a chart, it
Yep.
just diffuses it, takes away the emotion. I think another really important thing about technical analysis is, again, it's a function as an analyst. If you've done your work on the fundamentals or however you're making decisions, and I think a lot of people, myself included, sometimes when we invest, we think this is the way it should be.
Right.
But technical analysis is telling you what it is.
Yep.
So it's telling you something. If it's disagreeing with your conclusions, you got to figure out why.
Yep.
And then it is a decision-making framework, usually shorter-term stuff. So, a financial advisor or investor long-term, you don't really need that decision-making trigger, but, some investment professionals need it. And then I think the implied message of a lot of technical analysis is one of the most fundamental reasons why some investment managers are successful is that it lets your winners run and you cut your losers short. You've got to cut your losers short. That's one of the most important things, whether you're long term or short term. And technical analysis supplies that discipline.
Yep.
So, you know what? I've talked so much, I forgot if I even answered your question.
No. You nailed it there. I just kind of find out the background. You nailed it there. And I find always I'm not a big market technician, but I give it a lot of respect. I know ultimately earnings are what drives stock prices, but the way I use it for myself is knowing if I can understand the earnings, then you can look at the picture. And I like to say it gives me a very quick thing, price and proof.
Yeah.
And price and proof rarely happen at the same time. So you look at a picture, something's down, an industry's down 30%, but you know that the earnings are about to hook up. You kind of can look at it and say, yeah, that bad news is probably priced into it. May not all be priced into it, but you're right. It's part of a body of work that you look at.
Yeah.
And I want to throw in something for those of you, the most recent Wall Street Journal ranking of colleges, and you can correct me on this, Babson College was top 5. It might have even been number 3.
I want to say it was number 2.
Oh, there we
number
go.
3.
I love it there. I love it. Yeah, number 2. I thought it was top 3. Okay, so it's top 3. It's number 2. Babson College is the number of people that have come out of that. It's phenomenal. So kudos to you for that. The other thing that I was thinking as you were talking about, numbers and how you got involved there, you loved economics. We've got a brand new thing we're doing this year. We always have interns. We have 2 full-time interns that are college kids that are here. But this summer, we've started a new program that we will definitely continue. We've got an intern summer academy. We have 6 high school kids. And it's going on right now. And they went through the module with the research department. And I just asked them how it went. And they said, the kids were on the edge of their seat asking question after question. And that's good news.
That's awesome.
The bad news is what it tells you is in high school, they don't teach you about what a 401k is. They don't teach you about a 529. They don't teach you about compounding. They don't teach you about earlier the better. And it's really a missed opportunity at the high school level because those are life lessons that if you can get that in early, oh my gosh.
The problem with a lot of those classes too, like when people do take finance in high school or even college, I think they're teaching the wrong messages because they usually create a competition and it's usually something really short term. And I wanted good grades in college. I would have gamed it, but that's not the messages you really want to get across. You're right. It's almost like you got to get down to brass tacks. You got to do a budget.
Exactly.
And then maybe you could probably set up a game where maybe I would say accelerate the time frame. So it's like really a 10-year time frame over the course of 3 months or something like that. But I do think that they're not teaching the right things to younger people.
Yeah, it's a very good point. Very good point. So one last question before we wrap this up here. What's something like if someone comes up to you and says, hey, Rusty, I've seen your body of work. I know a little bit about your background. I know more about you. What's one thing that we haven't covered that people would be, whoa, I didn't see that one coming?
Well, let's see. So I, I guess that in terms, well, I'll kind of like two-part this.
Yeah.
So kind of in terms of what I do and sort of outside of work, and I kind of have what I call my priority stack. And it's the we talked about the five P's earlier. Well,
Yep.
I've got the five F's. You
Ooh.
know, the three of them are the primary ones, and it's faith, family, and fitness,
Yep.
and then the other four are fellowship and fun with an exclamation point. So it's sort of the priority stack. And then again, I'm just really active,
Yep.
and the paddleboarding you already mentioned. I used to do a lot of paddleboard racing. I still want to. I am a big hiker, and I go on a big hike every year and a lot of little hikes. My wife joins me, which is really great on a lot of those as well. So I don't think it's a surprise to people that I'm active.
Right.
But I guess if there's maybe some surprises, is that, I mean, I played competitive softball in Boston till I was 40. I was played competitive basketball till I was 45. I actually won an old man's city championship. I was 45. Should be an asterisk on that though, because I did get injured, so I didn't actually help him win the championship game. But I am still listed on the roster. But probably the one thing that I think surprises people is that, so when I lived in Boston, I lived in a town called Marblehead, Massachusetts. And when I moved back to Nebraska, what I did is I bought an indoor rower and I watched surfing videos. I guess I missed the water. So I did that.
Love it.
So I did that enough, and I end up entering something called the Crash Bees, which is the World Indoor Rowing Championship. It's legit. People from all around the world coming to it. And I finished like 12th in the world. So
Oh
I did do that.
my
Now
gosh.
people were speaking different languages
Yeah.
on both of me, and there's only two weight classes, and so
Yeah.
I was a lightweight, so I had to cut a little bit of weight to get down there. But so anyway, I don't know if that surprised anybody that I'm active, but
Yeah.
that's something that was kind of cool. And also, I do have a house in Florida, so that's where I paddleboard a lot.
Yeah.
And something else that I do every day in Florida is I have to shoot at least 25 jump shots.
Oh my gosh.
So that's just something I just do. And if I don't make 13 of them, I gotta shoot another set of 25.
I love, and that goes back to the routine, the
Yep.
discipline, the reps. If you want to get good at anything, you
Yeah.
got to just stay after.
Yep, that's right.
Oh my gosh, I love it. All right. Well, Rusty, it's been a pleasure. And like I said, we couldn't be more excited to have you as part of the formal team here at Maine Management, as one of the family members here. So we're really looking forward to some great content in the future, and then just having some of just again continuing to build the partnership that we have here. So thank you
Absolutely.
for your
Kim,
time.
thank you. I'm excited.
Love it.
I mean, this is going to be fun, and we're going to have a lot of fun. And again, having a positive impact, whether it's advisors, investors, or even the interns.
Yeah.
I look forward to it. Making a difference.
And tomorrow, I know you and I and Daryl, we're going out for a big hike.
All right.
So looking forward to that. So, well, once again, you guys, everybody, thank you for your time. Thank you for your partnership. And again, we're an open book. If you got any questions for any of us, feel free to come after us. Thanks again.